In chapter or module 12 now, the first problem is the one I'm working out for you, and you're going to work on this one and the rest of them. I want to encourage you that this module is extremely important if you want to do well in the finance class that follows this class. Okay, so I would really suggest that you pay attention to this chapter and make sure you do all the homework, understand it. So with that said, I'm going to share my screen. Here we go. So I'm looking at the first problem that you have for chapter or for module 12 here. So let me go right ahead and dive right in. This takes some time. I put this into a spreadsheet where I worked out all of it. So, okay, now I have my own numbers, but first of all, they're giving you this right here. Okay, they're also giving you this information right here. Okay, all the way down. A lot of info. But what we're doing here is working on forecasting. So what we do is we have these 2 years here from the past. We have these various accounts, and you can see them down here. And we're applying what they tell us to do in the problem to forecast. So if we go down here, we're saying net sales growth is 5.5%, cost of sales is 60% of net sales. When it says 60%, they're saying what this means is cost of sales is 60% of net sales. Selling general and admin is 21.5% of net sales. These accounts don't change. They're zero. The interest is 3. They just give you the interest here. You have to use 29.70% of, and it tells you of pre-tax income. And after-tax earnings from joint ventures they give you. This one, net earnings attributable to non-controlling interest divided by net earnings before attribution. So you're going to apply this to the net earnings before attribution, 40% or not 40%, 0.40%. Okay. Okay, and then this receivables net of sales is 7.8% of the net sales. It's 10.8% for inventories. Deferred income tax is 0.20% and etc. Gives you this information going down. Okay, so the top part is basically what you use for the income statement, and the bottom part is what you use for the balance sheet. So let me show you what I did, okay? So here, this number right here, the net sales, I had to forecast it, and what did I do? I took the percentage that they gave us, the one they said it increased 5.5. So that's 1.055 times this number, right? And so I got the 15,698.61. And then it tells you what was the cost of goods sold. And the cost of goods sold is 60% of the net sales. So you can see I did that. And selling general and admin is 0.215 of net sales, etc. And some of them are just, numbers that you are given to you, okay? And then some of them you have to calculate. And you can see some of them are just sums, like earnings before income tax and equity. Some of them are just sums. Here's our income tax expense. It's 0.297 times E12, which is the earnings before income tax. And then here's after-tax earnings from joint ventures. This one, your net earnings including non-controlling. And then they're also giving you here the percentage you have to take, 0.4%, not 4%, 0.4%. And then you get attributable to General Mills. And that's the income statement. Now for the balance sheet. They give you what you have to do, and you can see up in my formula right here in the top left-hand corner. It's E5 times 0.078. I got those down below. I applied them to all of these accounts exactly as they said. Okay, and I did that all throughout, all the way through the accounts payable. It tells you what to do, what percentage you're going to apply for those accounts. And I went through and did them. And sometimes you have to use the balance that's there plus a percentage, etc. You do exactly what it says. Some of the time you just carry over the balance. If there's nothing said about the account and it doesn't say it's zero, then you're carrying over the balance from before, and etc. So I kept doing that. Some of these, like I said, are just carried over. You can see these accounts are carried over. Here's the total stockholders' equity. Now, I had to back into the cash. One thing that we have all the way here, you'll see we end up with everything, but we don't end up with cash. So what we have to do is plug the cash. So what I did was I added up E28 through, here we go. Land, buildings and equipment, goodwill, other intangible assets, other assets, and I get the total assets is 14. Is that right? What am I doing? Hold on a second. I'm getting the assets in addition to the current assets. Okay, it's 14,818.62. I just put this over here for my calculations. And then this one is that plus the current assets. And then what I have to do is take that number and subtract it from the total liabilities and equity, and then I get the cash plug number, 785.29. Okay, I'm not putting this here because it's going to wreck up my formulas that I did. Okay, but that's how I figured it out. So you plug the cash after you do all the others, is basically it. Okay, now you're going to have some more problems to do. I suggest you set up your Excel spreadsheet and work through these problems, because when you get to the finance, you're definitely going to be doing this. And that's one of the reasons we have this chapter in here, so that you will know how to do it and that you can't tell Dr. Hemley, I've never done this before. Okay, so make sure you do this, very important. Okay, well, that's all for now. What I'm going to do is I'm going to stop sharing. I'm going to say, make sure you do chapter 12, very important. And I'm going to stop and say, I'll see you online.